All right, you should have a slide up, right, that says Saturday morning coffee at DTS. It's also called Coffee with Paul, the same name, same event, just a couple different titles to keep you on your toes all the time. Let's get going because we want to get out of here 30, 40 minutes, and I hope you're all doing well. Everybody doing good? Here's what we do on the Saturday morning coffees. This is recorded, the Wednesday special events, when you see a special topic, and the Saturday morning coffees are recorded. There's no pre-planned event for this. I just kind of typically wake up and say what's on my mind, and I did. At first, I was almost, first time ever, I kind of was like, what to talk about, and then, as usual, stuff started pouring into me. So there is going to be a main topic here for today. We had an open house this week, and the last day I just kind of rambled off a little lecture to everybody and sent a summary of it real quick. And I think the highlights of that are some fantastic talking points to go over because they are, I think at the heart of being successful at trading. It's a whole bunch of maybe cliche sayings. Well, not cliche because I'm the only one that says most of these, but I think there's some great topics. So we're going to go through that list. Again, it's kind of this is the one opportunity for you guys to ask questions kind of in an event because typically when I do the events with a specific topic, we're talking about that topic. I don't go off target too much, and maybe at the end there's a couple questions, but a lot of people have left already. So I think when I stop and say, hey, questions, people are kind of frozen. So I'm just going to open up to questions throughout the entire thing. So there's nothing to interrupt. This first priority is if you have any questions about anything, whether it's about DTS, me, you, your trading, your wannabe trading, questions about the market, whatever it is, just have at it. I'll stop and take your question. Sound fair? So go ahead, go. And while I'm waiting, rather than sitting here tapping my fingers, I will just keep on going. Just a couple of quick slides here. What's been up at DTS? I know some of you are terribly interested in this. Sort of a couple of highlights from the last couple of weeks here too. We had an open house at the DTS trading room. We had 174 people go through the first day and then an additional 16 the second day. So we had a lot of people turn out. We had a great time, good trading, and good jokes as always. So to all of you people that were there, hope you had fun. And we'll hope to see you in the room at sometime in the future. Long-term trader, still kicking butt, as I like to say. End of second quarter, I said it'd be hard to maintain the performance because it was 66. Well, we're up to 80. But what I want to point out to you is that I'm really focused on the short side. And when you hear mutual funds state that they're going to try to not lose as much money as the market does when the market drops, that's pretty scary. I don't know what time, how long it'll take, but this is going to be a extremely difficult bear market coming up at some point. I absolutely know it. There's no question about it. I've been sitting in front of the screen watching charts for 20 years, and there is some voodoo going on out there like I've never seen before, and it is going to lead to something really bad for a lot of people. So just make sure you're prepared for that, however you do want to handle it. There's stats there for you people that like stats. And just another reminder, the DTS Home Study is here. So those of you who have been waiting for the Home Study course, if you want to get an education on what you're doing, of course, at DTS, you can just follow the long-term trader for long-term investments. You can follow in the DTS trading room, or you can learn to do it yourself. Whatever I do in the trading room and in the long-term trader are all the things that I teach. I teach what I do what I teach. And the home study course is a choice for some people who either are a little slower at learning, don't like the classroom setting, aren't available on Saturdays, whatever it is. So it's a great addition, and it has been 100% rave reviews from everybody who's taken it. Monday night scanning night, you'll get an invite for that today. And then there's a couple little changes on the calendar for those of you that follow the calendar. Seminar people, we're having our PARD on Thursday. I'm also going to schedule a little seminar get together to talk about the home study and about future classes. And then the Wednesday event, a week from Wednesday, I'm going to be guest speaking somewhere. I got invited somewhere. So rather than being a DTS event, I'll be guest speaking somewhere. You'll get invites for all that stuff, just FYI. You're supposed to be asking questions during this, by the way, so otherwise we'll be done in 20 minutes. I'm going to say this, and this may not be a comment some of you like, but it hit me this week during the trading room, because I'm sitting there saying, we have, there are 190 people came through the trading room. Obviously, these people are available somewhat to be able to trade because they're there. They're there for the open house unless somebody took off work to be there. And I'm a big proponent, that to start off day trading, you should start off just a day or two a week if you're doing something else. That's the best way to do it. People have this mistaken attitude that they think they should just all of a sudden flip over to be a professional day trader. It's not the way to do it. You just, whatever you're doing now, if you're somebody who has a morning or two free, we're basically done at 10:30, 11 o'clock. 95% of all the trades are done before 11 o'clock. And actually the ones that are done after 11 o'clock, I think are break even at best, so you're not missing anything if you're done at 11 every day, and typically 10:30. But I was just in there thinking, all these people, and I know some of these people have been here before, and you know what these people are? A lot of them I came to realize. You guys tell me, 190 people come to an open house, and we have like mid 40s that are subscribed to the room, and typically there's 30 in a day that show up there. But what are all these people doing? What are all these people doing? Because I know, and it just hit me, and it makes me a little frustrated. What are these people doing? Why is there 190 people at open house, and almost all of them will just say, well, I'll see you next open house. What are they doing? Maybe jumping around. Now, I think a lot of these people really like me. They're here for me. But sure, there's some people that are jumping around. You know what they've been doing though? Roger has the answer probably here. I bet you some of you have experienced this. You're seconding that, okay. Well, I think what a lot of people have is they get an account together, right? Just barely. Remember for day trading, if you're not going to go prop, you need $25,000. So they probably get $25,500 together. And then they decide, well, you know what? I don't want to spend any other money, so I'm not going to go into trading, and I'm not going to get any education. And then what happens? They lose a couple $1,000s, they're below the minimum, and they can't day trade. They got to build it back up again. I think a lot of these people are just sticking their toe in and out, trying to figure it out. And the biggest problem, and again, I understand people that want to learn themselves. I told you, that's why the free stuff page is there. I wanted to do that. But what's gotten me mad now is people, this right here, this slide. I'm getting sick of people that just keep having psychological problems. And I hate to phrase it that way. Psychology obviously is a big deal. It's what I consider to be one of the three legs of the stool you have to learn. But learn it and get over it. It's not the impossible thing to do. And it especially frustrates me because I teach everything you need to know to get over the psychological part. And that's just not for the seminar. If you look through the free stuff page, really virtually every piece of information you know to overcome psychology is there in various different presentations. And I spelled it out in many of those, exactly what you need to do. But people just don't do it, right? Right, Marinus? People just don't do it. And I hate to tell you, but I think this is good for all you to hear. If you're one of those people that are just, you keep sticking your toe in and then you don't follow your rules, and you stick your toe and don't follow your rules, and you're back out again. At some point, well, it's worse than that, Glenn. At some point, it just comes down to a lack of discipline. And a lack of discipline, in my language, in my dictionary, that's a synonym to laziness, right? Just go in there, do what feels good, hope it works, and when it doesn't work, you start all over again. And you got to stop. Do you want to make money trading or not? And you have to commit to what it is you need to do. I want to remind you, 95% of people that come to the market have a hard time with it. They take a long time to learn, and you got to be different. You got to think outside the box. You got to be a little different than most people. And maybe I got this frustration because I got an email last week. Maybe this is part of it in the back of my head that started this. I got an email from somebody. I hear from occasionally, not in the room, not a student, just keeps in touch and, lets me know about a trade here and there. And he's done. He's done. There's a stock that gapped up like $14 million. And, whenever he talks to me, just occasionally, maybe every month he sends me a trade and says, gee, I had a hard time with this one. Is this a good trade? And virtually every trade he sends me, it's either, no, that's a bad trade, or, well, I get it, but I would never do that. It's always the two categories. He goes for the home runs type of thing. You know what I mean? That's all he knows to do is just go for the home runs. So a stock, it gapped up, $4.2 bazillion, whatever it was, and he went long. And of course, the stock fell all morning. And it wasn't necessarily a bearish gap, but you don't go long at 931 and just hope it goes higher. He lost a lot of money going long. He got mad, and what do you think he did? The stock fell for an hour. He'd lost a lot of money. What do you think he did after the hour? No, nope, the other way, Roger. The old double Heimlich punch in the stomach. No, he flipped and went short. He flipped and went short because you're mad at losing money on the long side. You ever do that? And of course, guess what the stock did? The stock literally went to a new high. Whereas if he would have hung on to his first stupid, and he was done. He's done. I don't know what done meant. I don't know if that means below 25,000 or below zero. I don't really know. But it's like, I just wanted to say back to you, you've been doing this for as long as you've been emailing me. I'm sorry, you deserve it, kind of. Sometimes people need to get a punch in the stomach to realize it, but that is just, there's no excuse for that. There's no excuse for that. If you can't succeed the way I teach you, day trading, you would lose a very small amount of money over a period of time, and then you would say, boy, this just isn't for me. And you would waste your time if you consider that wasted time. You would not waste your money. No, of course not, Raj. I didn't mean to imply that at all. And that's why I said several times, if this applies to you, if this is you, there's a lot of great traders, people in the room with me. I'm just saying there's just a big group out there, Raj, I'm saying. I'm not yelling. You got most of the people here, Raj, are students of mine or in the room with me or whatever. But I'm just saying that I just want to open your eyes. Don't be that person. That's all. You know what I'm saying? Just don't be that person, right? And no, that's one example, but I know, I've been doing this for 20 years working with people. This happens to a ton of people. Psychological problems kill a lot of people. They just don't follow what they're supposed to do. They may not know what they're supposed to do, but even to the extent that they have their own plan. Do you see what I'm saying? Even if their little concept of trading is wrong, they don't even follow what they want to do, right? The slogan I always say here is the Nike thing, just do it, right? Just do it. When it comes to following what you have to do in discipline, you just have to do it. At some point, that's all it comes down to. So I'm on my list, which is thank you, Mark. I'm down to my list here, which is actually 2+ slides long. So again, if you have any questions, feel free. I see a couple people typing. I'll have a little coffee. This is coffee at DTS, so everybody have some coffee. It is part of the seminar program, Jim. Yeah, it is not, and again, I emphasize that everywhere. Yeah, it's in the seminar program descriptions. If you click on the seminar program, everything you want to know about the seminar program, it's in that description now. So it's there. Actually, if you're asking, I think I actually have there's a quick little slide. I wasn't gonna show this. I just knew it was in the back of these slides that I didn't delete. But it's all one program. So you get the home study, you get the live classes, everything. And this slide here, it's probably also when you look at the information, but it's just simply, pointing out to you that there are pros and cons of recorded material and not. And I think you get the best of both worlds, but I think you would make it if you could only do the home study, because there are some people I know that have been waiting for it because they can't attend Saturday classes, or they're just what they consider very, well, not necessarily slow learners, but they just like to take their time and go through. And the setting in a Saturday class, they have a hard time keeping up. So this is great for them, and I think if it's all you could do, it'd be great. But I do recommend, as it says, if you look at the 100-day schedule, that you should try to attend live whenever you can, and then have the home study for reinforcement. Okay. All right. Some summary comments that I made to the traders the last day of the open house, just some parting comments. And I realize I think these are some really great comments. They're things I say all the time, but I just put them all in one spot. So let me run down them real quick. Take 10 or 15 minutes. It'll be 9:35, and then if you don't have any questions, we'll be done. Number one, good trading should be boring. Good trading should be boring. Not much to add to that. We say that in the room all the time. It should not be exciting, exhilarating. If you're doing that, you're probably either not confident or taking the wrong types of trades. It should be boring. It's like, this is what I do. Works most of the time. Sometimes it doesn't. I know statistically, odds-wise, I'll be making money at the end of whatever period of time. Boring. The reverse of that is also true. You cannot trade nervously. To do that, you have to gain confidence. You get that by knowing charts well enough to find that moment in time. Whenever I talk about management, it always amazes me that if somebody gets in a day trade and they're perhaps, maybe on a 15-minute chart, let's say, and they're planning on holding it for several hours during the day, that they sit there staring at it minutes after they got into it. And it's like, what are you even looking at? What are you doing? You have a stop in place. You have a target out there somewhere. And maybe it might be appropriate somewhere between your entry point and your target to adjust something called management, but there's nothing you can do for, half hour, 2 hours. There's nothing even conceivably that could happen. But yet people sit there and stare at things nervously. There's very, very bad. You're just not going to make it if you do that, because the people that get that nervous and sit there and stare at their trades always end up, always, I will say always, Raj, if you sit there and stare at your trades, you always end up with a series of small winners and small losers. And even if you're pretty good, you'll end up having to quit because you just won't make any money. It's never good, number 3. It's never good to sit there and stare at the screen all day, especially when you no longer have a plan. And this is why I am so very focused on just trading that opening hour to 90 minutes, because I have a plan for that. I know what to do. Those of you in the room with me, we go through, I start off the night before looking at a total of about 1,500 symbols between daily charts, hourly charts, gap list, prior gaps, carry list. And then we boil it down to, maybe 15 stocks or something, 10, 12. And of those, about half of those, maybe 4, 5, 6, are the super hot list that I'm looking at it open. And every one of those stocks, I know exactly what I want it to do. And I'm not just staring there wondering if I can find something. So at some point, you lose that. At some point later in the morning, it's like, okay, everything I have on my list is either gone or broken, so it's not set up right. There's nothing to do. So I think you got to keep that focus. And again, you don't have to focus on the opening hour. You can focus at lunch. You can focus in the afternoon. It doesn't matter. I'm not saying that the morning is the right time. What I'm saying is to maximize what you do by focusing on a certain period of time. It's also, I don't think anybody can sit there for 6.5 hours. You totally lose your perspective. Those who've been trading a while, you agree with me? I'm sure you've all done it. You sit there 6 hours, you totally lose your perspective of what's going on. True? At some point in time. Agree? Totally. And the way you can prove it to yourself is just walk away for an hour and come back, and the charts look totally different. I don't mean because it's an hour later. I mean just your perception looks totally different, because you're not like getting sucked down that rabbit hole where you just don't know what's going on around you, right? So however you do it, focus on a period of time, get in, get out, get the job done. As a day trader, of course. I mentioned, I think on the slide it said most of these comments, this of course was to the comments to the guests at the day trading room. So these are mostly geared to day trading, but many of them apply to even if you're long term. These ones about sitting and staring at the screen, of course, hopefully that just applies to day trading. If you take a if you take a long-term position, you stare at it all day long for months on end, then you have a separate problem. 90% of traders, 90%, with some technical skill will not make it because of the management style that is designed to lock small profits and small losses. I made up that number. I mean, it's not a statistic where you go out and hire a company to go research. I'm just saying that working with people, I have to tell you, it's pretty true. And the point of that is that you have to learn charts really well. There's no doubt about that. However you do that, you have to get to that upper level of chart, but that's not hard to do, not hard at all. And my comment has always been that good chart readers like that, it's I think a very good accomplishment to get there where you can read a chart really well, but there's still a dime a dozen, and you're not going to make money necessarily just because you read a chart, because the problem is many traders can't get the money into the bank, as I like to say. In other words, they can see a chart, they know it's going from point A to point B, they know this chart's going up, they know this chart's going down, but between poor entries and poor management, they never really make money, because you're still going to have losers, right? So you have to have winners that more than offset the losers, and unfortunately most people's winners turn out to be just mediocre. Trading becomes very fruitful when you start averaging 2+ sharp rates. Yep. Yeah, Mirren, it's a great comment. I mean, it's absolutely true. Mirren is referred to as sharp ratio, and for those of you not familiar with the term, it just means it's like your reward to risk after the fact. So if you risked $200 and you made $400, you had a 2 reward to risk or a 2 sharp ratio when the trade's done. And you have to have some kind of great ratio. I mean, either you have to get a lot of your trades right. In maybe if you just have equal winners, equal losers, well, obviously you have to get significantly more than half your trades right. But if you get half your trades right and your winners are twice as big as your losers, you're kicking butt, all over the place. But you have to do something. You have to do something other than sit there and get some of the trades right and make some money on some of the trades. You're not going to make money doing that, obviously. And to his point, I mean, I agree. As much as I think I'm more patient than a lot of people out there, for me to get the nice winners, I do it all the time walking away from the screen. And every once in a while I get somebody that says, oh, you can't do that. That's really silly because you got to sit there and manage things. Those people, Raj, 100% of those people are losers. If you tell me that you can't walk away from your trade. Now, understand, maybe you're a scalper, so maybe you're holding a trade for 5 minutes. Fine, then walk away for 2.5 minutes. But the point is that sitting there and staring at your trade to manage it, when you don't even have a management policy most of the time, you will end up quitting. It's just a fact. There's no question about it. And then that leads to this question. There are different ways to make money. Now, I have always been big on saying there's right things to do in the market. There's wrong things. There's things where I will just tell you that's stupid. You're going to lose money, period. But there's different right ways to do things. There are things that are what I would call not my style, but you can make money on. I have no problem with that. But the question is, do you have one? Do you have a concept, a method, a strategy by which you're making money? Or do you just sit down every day and hope that through the power of osmosis that somehow things are going to work out for you? And when they don't, you just say, well, I'll do better tomorrow. Is one way to avoid staring at the screen to use brackers? Oh yeah, Chris, absolutely. That's what we're talking about. I mean, Chris, when you get in your trade, now again, I don't want to oversimplify this because I do believe in the concept of managing a stop, but when you get in a trade, somewhere you should put a floor. And it may not necessarily be where the chart tells you to, but somewhere you should put a floor to say, if I walk away and this thing falls apart, I don't want to lose more than X amount of money, right? So number one, you always put a stop order in when you walk away. That's thing one when you start. And then you offer something out, right? You offer something out to where you think your target is, or you can just walk away. I'm talking to you. Or you can just walk away, Chris, and not worry about having a top target at all. Sometimes you get these really big moves. It's just a funny little scenario that happens sometimes when I walk away. But I have to tell you, it's very rare that I feel walking away loses me money. Now, certainly there are times you could say that. You could have something run up, come just short of your target, and then collapse. You're like, oh, wow, what happened there? But it's very rare. And the amount of times it makes money is off the chart. But what's funny is maybe you have some stock that does this. And while you're away, boom, it has this big move. And you don't come back, and I don't come back to the screen for a while, and then I'm down here, and I put a trail stop there. And somebody says to me, man, Paul, if you would have been sitting there, you could have got out up here. You know what a stupid concept that is? Where would I have gotten out if I was sitting there probably? I would have been out probably down here somewhere, right? I wouldn't even been in that run up. So, when you have a huge move and then you miss the top, even if I was sitting there, I might not have got the top, of course. You just never know. Whatever you do, though, if you don't like the concept, the point is that somehow you have to manage in a way where you can capture a good part of moves. One of the things you can do just to check yourself is actually on the website and on the free stuff page, there's a little sheet you can download. It's a very simple sheet. It's nothing fancy. But it just tracks your target taking ability. In other words, it'll tell you at the end of the month, you took X amount of dollars or cents in targets. But what was your target? In other words, what percentage of your target did you get? And you may be shot, or it also says what's the percentage of the total move. So you may have a stock that you took 30 cents as a day trade, and you feel pretty proud about that, but the stock moved $4 that day. So, I mean, are you still proud of that? So that's what you got to take a look at, is how good you are. And you're never going to get all of a move. You're not supposed to. But how good are you at getting the bulk of a move when it happens, right? I do not send replays, but there is the free stuff page. And you'll see it in the free stuff page. You go to the free stuff page, and this will be posted there anywhere from 2 to 5 days after the event, typically. Okay. Trading reveals your personality, strengths, and weaknesses. Yeah. Yeah, I mean, I don't know if I came up with it or somebody told me and I stole it from, but in a sense, trading is like life. I mean, it's kind of weird, but yeah, trading really reveals a lot of stuff about yourself, which makes it hard for some people. All right, next slide. Common sense will lose money, even intelligent common sense. You have to think differently. Common sense loses money. Guys, successful traders out there in the market, true? Common sense will lose your money. Agree? You see people all the time spitting out common sense, and it's just irrelevant. It just doesn't matter. They always feel justified. One of these days, let's say someday in the future, let's just say for some strange reason the market has a big drop, right? Somebody's going to look back and say, boy, you know what caused that? It was da 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 da. Pick your thing. Interest rates. Inflation's here. Boy, I've known it. You know what? People have been telling me that printing money, inflation will kill the stock market for 8-9 years. So, everybody's always right, but they're normally off by 8 or 10 years. So it's not a matter of just being able to spew out stupid reasons why something happened. It's a matter of making money from moves and seeing it in the proper time frame to make money from it. So common sense is why I often end a lot of conversations teaching you about charts by saying the market is just a video game. It's what we do. If you want to be a normal human being, and I am too, and listen to news and listen to things that people say in politics, go ahead and do that. I do that too. But it has nothing to do with the stock market. Zero. Stock market is a video game. The rest of your life, do what you want to listen to news and events. You may not have fully understood the concepts of some of the trades in the room because they're not often common sense. You saw a long trade on FUTU. Was that the right symbol? FUTU? I think so. That was taken when it made a new low. I know. So we're sitting there in the room, and traders in the room with me know what I'm doing. And I'm sitting there saying this stock was dropping, and then it started to consolidate near the low. And I said, when this stock, right, people in the room, true? When this stock makes a new low, I want to go long. And somebody's like, what? Aren't you supposed to short it then? No. You have to understand charts. So when this made a new low, and boom, and actually it's going to be the trade of the week for that very reason, because it was going to be a shakeout move lower, and you have to identify that, and that's your opportunity to go long. And then, of course, the benefit you have as well is because people who decided to get short when it made a new low of the day, guess what they have to do? What do you have to do if you shorted the new low of the day and that turned out to be the low of the day? What do you have to do eventually? 5 minutes, 10 minutes, 2 hours, 3. You got to get out. And when you cover a position, how do you do it? You do it by buying the stock, which to the market is the same as anybody else buying. So there's pressure moving the stock up. The high of the day, the high of the day is not a strategy. I always chuckle, in the open houses where the open house people were great, by the way. You guys, if you were there, you're all just great. You're polite. You're, not. You seem to just be there to listen and learn, which is great. And some of you throw out some suggestions, and once we got going during the day, I looked at them and that type of thing. But it's just funny how many comments I get. That it's like, oh, blah, 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 new high of the day. Okay, what does that mean? It's raining outside. 2 dogs just walked by. New high of the day. It's like, who cares? It's like, that's a strategy? You buy a high of the day? I mean, most new highs, well, not most. Just as frequently a new high of the day is a short as it is a long. So many traders chase things that can only make money if the stock has a record move. This is a big one to me. There's a whole event out there on the free stuff page called ordinary moves. You have to make your salary in ordinary moves. Big moves should be the bonus when you get them. Most people's trading style, when you just look at the average partially trained trader, they're taking trades that they need to have a huge move to make their money. Now, that's great. I look for stocks that are going to have huge moves, but I don't bank on that as being my income. I just want something doing its normal, everyday thing. Where so you look back at the chart, some of the trade of the weeks I put out there, I chuckle myself because even like FUTU, I always show the daily chart first. And you look at the daily chart of FUTU the day I traded it, it's this little tiny bar. FUTU is a pretty wild stock, right? It's this little tiny bar. And you're looking and you're saying, well, how is this the trade of the week? It didn't do anything. But you know what? When a stock moves from yesterday's low to yesterday's high, and you capture that move with an appropriate stop, it can make a lot of money. As opposed to the person who buys it when it goes above yesterday's high and then stops out later because that was the high of the day. Does that make sense? And I know I don't have any charts up and I don't intend to, but does that make sense? Just a generic concept. Does that make sense, everyone? In other words, if a stock is just doing this, which is what 90% of the stocks do, right? And this would not be what I call a clean pattern, right? But if I go back and if I take the stock from here to here, I'm making money, right? But somebody who took the stock long here that day is not making money. So, there's times where you have to understand where you should kind of go for that bigger move and when you just want to play for the normal moves. If you are day trading before the market opens, take the last couple of minutes to ask yourself, and I do this in the room maybe every week, every other week, is there anything I learned from my trade review that I need to fix? And just in general, what I said before the market opens as a day trader, remind yourself that any trade you're looking at taking in the next 30 minutes, you should know right now exactly the entry that you're going to take. Now, Paul, how can you do that? You can't predict what the stock's going to do. No, you can't predict what the stock's going to do. But you can say to the stock, I need you to do this for me to get into. If you don't do this, go ahead. I don't care if I miss it. That's fine. It's not about what you miss. It's about what you make. So you have to decide ahead of time. And that way, there's no hesitation. When the stock does what you want it to do, you're in. Again, so many people, the stock, they look at the charts, it goes up, it goes down, and they just don't know what they want to do. So they're staring at it. And then, of course, what makes their decision is when the stock takes off, then they jump in super late. Then they jump in when I'm halfway to my target, and now they're hoping they get the big move because they didn't know that they should have got in at a lower level, right? Right. You react. And as a matter of fact, a recent presentation talked about that. I asked you the question that you should be true or false. You should be reacting to moves in the market, and the answer was no. I don't take this the wrong way when I say this because I don't mean this to be braggadocious, but it just is what it is. Whenever I do an event like this, you probably know if you do events, I just take the prior event and, erase slides. So the last Saturday coffee, because the title slide's there, most of the format's there, so I just change things around for the new event. But as I go through and I delete the slides, I often forget, just totally forget what I had even talked about. And I do this with the events on Wednesday too. There's some really good stuff in there. Like last coffee we had, man, those are some great slides. Those are some great presentations. I barely remember writing them. It's like I just throw it together, put it out there. But there's good stuff out there. I mean, just go look through that free stuff page. There's a lot of really good stuff out there. If you have even one free morning a week, it makes sense to join the room, start off part-time, learn, no pressure, blah, blah, blah. There we go. All right. Questions, anybody? You guys had very few real hard pushed questions here. Any questions, anybody? It's 9:40. I'm doing my part of the deal here. Here is the free stuff page. Sometimes I post them in 2 days. Sometimes they take the better part of a week to get posted. But check out the free stuff page. It's in the events section. And also, if you like YouTube, the DTS free stuff page is mirrored on YouTube as well. The advantage of YouTube is if you subscribe there, you'll get a notification when something new is posted. And then you can go to YouTube to watch it if you want. Or when it's posted on YouTube, it's simultaneously posted on the DTS free stuff page. So you can go to the DTS free stuff page if you want. The DTS free stuff page, you haven't been there, you can watch all the videos right on the site, either in mini view or expand them, and just go from video to video. If you're on YouTube, of course, they'll line up the next video. Some may be DTS, some may be other places. You can watch whatever you want to do, okay? Steve, you're a seminar student? You go to your seminar resources page. Remember the seminar resources page? And if you lost track of that, Steve, you go to any prior invite to a live class, or you can email me too, I'll send it to you again, but any prior invite to a live class down below has a reminder about the resources page, the password, and on the resources page, you have to fill out a little form to get access to the home study, okay? It could take a day to get it back to you, so don't expect it immediately. Any other questions, anybody? Trading mental game, as you stated, other than overcoming that, what are the other key moments you feel are critical in your trading journey? Honestly, Rich, the key moments were a couple of the things right here. Making your money from ordinary moves. A lot of this is stuff that you just the mental recognition of what you're doing. Does that make sense in a sense? Like you maybe in the back part of your mind been doing, and this is where like teaching people has helped me a lot. When you're forced to teach somebody how to do something and reinforces to you how to do it even better. Because a lot of times I've said this before, I've known how to do something, but I'd have a hard time teaching because it's like, well, I know what to do, but I really can't. It's like the problems a lot of people have writing trading plans. You may kind of know what to do, but you don't know how to put it on paper. So it's when I think I always had the attitude of trying to make money from normal moves because the other way didn't work for me. But that acknowledgement to say, look, this is what you do. You make money from here to here. The acknowledgement that you always know ahead of time what your entries, that's probably a big one for me, was just knowing ahead of time, this is where I will get in or I do not get in. And you could have two entry concepts. I'm not saying you can't. I'm just saying that whatever you're going to do has to be planned ahead of time and you follow it. And you guys, right in the room, you hear me all the time say, okay, that's going to go without me, right? Because at some point the odds change. We had a stock gap up, right, last week sometime, and it just gapped a little too far for me. I said it's probably going to fly higher, but it's now out of range for me because the more and more it gaps up, the less likely it's going to run higher. And also, you start changing your ability to get in. Where's your stop going to be? You start losing the dynamics of making money. So, sometimes you just have to say, you have to be willing to accept that it's not what you miss, it's what you make. There's opportunities all over. You just gotta find a couple things to make your money as a day trader, make your salary, walk away and maybe have something extra on the table to have a really nice day. That's what I call the walk away, and let it go. And don't be sitting there greedily coming back to the table when you don't have the odds. Werner asked a great question. Let me address that. Werner, the long-term letter is designed for long-term holds. I've had several things that have held for about 6 months. They haven't been much over 6 months. And that's for a good reason because there was just such profit that I ended up exiting. But and some things are shorter target. But here's the thing, Werner. Things have changed in two respects. I believe in getting great entries, and that means I am coming down to find entries that usually occur in the last half of the trading day. Now, I virtually never want to enter something the opening hour for a long-term position because of the gyrations. But given the fact that everybody has cell phones, access to accounts on your phone, etc., I think that it is imperative that you are able to enter or exit during the day. Now, if you can't, maybe you just get by. You don't. I mean, maybe you don't get the best entry, the best exit. But yes, it is stated that you should be able to enter and exit during the day. Now, again, if you've seen the information on long-term traders, there's not like there's zillions of positions. There's a couple, 3 positions a month, whatever it's averaged out to be. So it's not like this is something every day you got to worry about it. And also a new feature that was added, Werner, was we now have an automatic text service. So when you get a long-term trader email, you get a little text saying you have an email. It doesn't give you the position stuff. It just says check your email. So that's helpful too. Okay? You're supposed to have a plan to trade successfully, but when you're starting out, you don't know what style suits your personality. Would you say that people starting out should try different styles? Yeah, well, actually, John, this is all spelled out in the program, and you can kind of get a feel for it on the website where you can get it. If you go to the seminars page, there's something called a 100-day schedule. And it kind of goes through that, John. But in a nutshell, what I tell people to do is to, when they start off, naturally, the 100-day schedule is tied in and revolves around their education, the seminar program. But whatever you're doing, what my recommendation is that at some point early on when you're starting to learn, is to start paper trading. And just paper trade like a maniac. Just paper trade everything, anything, whatever you want to do. And that's where you're trying to get a sense of what it is that you like. Because, if I surveyed the room, John, half the people would like breakouts and half would like pullbacks. I've done that before. It's just what it is. Day trading, some people want to be on a 5-minute chart, some want to be on a 60-minute chart, right? So there are all kinds of different things you could do, and there's different strategies of what to do. And some people want to take really wide bottoming tail type of entries, so your stop is far away and you never stop out. Some people want to get tight little stops so they can maybe make a lot of money. There's all different styles, but go paper trade it and you will figure out what you like. And then as you start to figure out what you like, just start writing it down. And that is the beginning of your trading plan. Just saying, hey, what do I want to do in English? And then you just start perfecting that. That's all you do. Your trading plan should be written your opening couple of weeks that you start paper trading. That's when you write your trading plan. And then you perfect it throughout your first 6 months. I think one other thing that really helped me was understanding that you can make a living making 1 hour a day. You don't feel the pressure and try and write. Yeah, that too, Mirnas. And again, for those that want to understand that better, again, on the free stuff page, it's an older event, but it's I'm 99% sure it's one. I'm sure it's in the Hall of Fame section. On the free stuff page, if you're overwhelmed, there's a Hall of Fame section where the top 5 videos voted on by members here pick the best videos, and one of those is called From Chart Reader to Trader Investor, and it talks about what Mirnas is talking about, which is critically important. Again, I see so many people make the big mistake, and the big theme of that is that when people start to be successful day trading, and they're risking $100 or something, right? But they want to make 500 a day or 1,000 a day or whatever. Well, they get this backward attitude to say, well, I'm going to be conservative. I don't want to, I don't want to be crazy. So I'm going to keep my risk at $100 and take 5 times as many trades. Does that make sense to anybody here? You have a successful track record. You're doing well. You're getting 60% of your trades right. You're making money. You want to make more money. So you decide to triple the trades you're taking? Yeah, no, because you can't. Because you will, I mean, if you spend all day, if you spend preparing, you look at 1,500 stocks, boil it down to 15, find your top 5, take 2 of those trades, and now you tell me, oh, Paul, you got to take 10 more trades to make your salary today. Well, where are these 10 trades coming from? They're watered down trades. You don't have the odds. So if you're making money, what you're doing, you just start increasing the risk slowly with a good track record. People do everything backwards money-wise. They start off big, and then they never get big enough. Got to do it the opposite. You got to start off so tiny it's embarrassing. Men, sorry, you got to start off Zippo. And then there's no limit to the top. There's no limit to the top. Other than at some point you may have to reduce your universe of stocks you look at to get the higher volume stocks. But there's many stocks you could take 10,000 shares. Right. I mean, it's again, see the movie 21, and then when you're done seeing the movie 21, go to the other stuff page and watch the 2-minute clip from the movie 21, which will change your life as a trader. And if it doesn't, then you probably won't be successful as a trader. Right. Well, that's what you're forced to do, right, John? It's just common sense. It's just math. It's just statistics. You can't argue with it, right? I mean, if you ranked every trade from 1 to 100 in terms of quality, right, the top 1 is going to be your best trade. I mean, theoretically, statistically. Your top 2 or 3, great. But you tell me to dip down to number 10, it's not going to be as good as number 1, which means you're going to have higher chances of losing money, and you start watering things down. And I'm not saying don't read it backwards. I'm not saying you can't take 10, 15, 20 trades a day, depending on what your plan is. I'm just saying whatever your top focus is, whatever you said, here is my bread and butter, if you now say, well, go triple that, you can't. Any other questions? You're going to have to draw it here. It's 9:55. I was done at 9:40, 15 minutes of questions. Sounds just right. I think we're good here. All right, guys. Have a good one. Those of you in the room, we'll see you Monday. And for everybody, Monday will be also the bi-weekly scanning session. So we'll see you all Monday night. If you're just a free member, we'll see you in the room if you're in the room. See you on Monday.